another expert now joining us to see whether some sanity will return to Indian markets. We have seen manic selling practically on a couple of days last week, including yesterday. Arvind Sanger, the managing partner at Geosphere Capital Management, joins us now. Well, good morning to you, Arvind. Well, straight away, a domestic question. India kind of underperformed markets. Global cues certainly helped the selling, but India was moving down on her own steam. Do you think that the selling has now reached manic proportions and should stabilize?
Well, it's interesting. I think the large cap selling has been more subdued. I think what has really caught my attention is the level of selling in the mid and small caps, which is really, what you had latter part of last year is you had FIs selling and you had domestic investors buying. And part of the reason that the mid caps did so well is because that's where the domestics were putting their money to work. So what's surprising to us is the magnitude of the selling in the mid caps, which suggests that even domestic money is now taking a little bit of a risk-off attitude. So, it's always hard to tell when the selling is over, but I think the selling has been rather indiscriminate and rather aggressive. I'm not sure that it's done yet, but I think, the global factors and the lack of visible earnings momentum in India are combined, probably not just driving FIIs to take a little bit of a backseat, but even there might be some domestic investors that are selling. So I'm not sure that it's over yet, but it certainly looks somewhat disorderly and panicky. And I don't think the economic underpinnings of India are anything to get panicked about. Although obviously this quarter's earnings, like the last couple of quarters, has not been anything to write home about. But I don't think it's falling apart by any stretch.
Okay. Arvind, hi, morning. Generally, when there is a panic situation like this, there are a lot of extreme views that float around in the market. For example, today there are, channels talking about the possibility of perhaps the US entering into a recessionary situation, which seems a bit bizarre. Do you think this kind of bearish prognosis is a bit overstated?
I certainly don't have as my central case that the US is entering a recession. I think what we have to be respectful of is if you look back at 2008, where the market action was quite similar at the start of the year, what we found out after the fact 6 months later that the US had already, well before Lehman or Bear Stearns, that the US had already gone into a mild recession in the first quarter of 2008. So we can all sit here and say this makes no sense and it's unlikely, but we'll only know in a few months whether the markets were wrong, because there's the old joke that the markets have forecast 10 out of the last 5 recessions. So the markets always overreact many times. So we don't know. My central case is the US is not the problem. I think China is a problem. And I heard your last speaker, but I have to say that it's quite laughable to be discussing whether China grew at 6.8 or 6.9 or 7, because if that were the only difference, the markets would be shrugging it off. But the reason the markets are so nervous is because every economic indicator in China indirectly is suggesting that China is, in serious slowdown mode. And I think that's the real concern, that Chinese, currency risk, which could have spillover effect for other emerging markets and for global deflation, that coupled with, oil continuing to come down, those are probably the biggest factors that are causing people to then come up with additional theories like whether the US is going into a recession or what else is going on in the world.
Okay, Arvind, hi. Just to extend that mid-cap point a bit further, is this market now at a risk of seeing domestic money completely fleecing this market or going away because of the kind of selling that we have seen? And again, those uncomfortable questions being asked, that is this the repeat of 2008? Because that's the most feedback we get from Twitter.
Well, I think that's an interesting one, because then it's a global call. If it were just India specific, I think the markets would stabilize and would recover from here. But I think it's right now investors nervous about global cues and therefore not wanting to get caught with the too bullish a view if things are falling apart. My central case is that the markets are oversold, and over the next few days they should start to stabilize and hopefully recover moderately from here. If that happens, then I think India mid-cap sell-off pressure should ease, but you could still see some more panic, but I think that we are seeing green shoots in the Indian economy. And as long as global economies are not falling apart, I think the green shoots should cause this sell-off to be somewhat short-lived. But as I said, the one area that I worry about a lot is China and what might happen there in terms of currency. And if that were to destabilize in them having to do any kind of a sharp devaluation, then all bets would be off, even in Indian mid-caps, because currency risk would cause investors to worry about inflationary blow-through and other negatives that could cause the Indian markets to take a hit, but that's not our central case right now.
Well, I wanted to ask whether you would use this, what I would call bargain basement prices, to buy any of the public sector banks. Anuj and I were discussing the numbers. Even historical reserves, and you can't argue with the historical book of State Bank of India, that was 216 rupees. At that point, it is 0.8 times book. And the forward book value is the consensus book value is 25 rupees lower, assuming a loss. Even then, it would come at like 0.7, and it's impossible to assume a loss in a bank like that. Do you think, banks like SBI, PNB, and even BOB are now reaching basement prices, bargain prices?
Well, I mean, we've been staying away from PSU banks, but why look at just a PSU banks? Look at a bank like ICICI Bank, which is trading around book or slightly below book now with the sell-off if you take a sum of the parts. So I think that you have significant sell-off in Indian financials, and there are some values appearing. The question is how far down the risk spectrum that one wants to go, given two factors. One is obviously the NPA issues that the RBI is pushing on recognition, which is ahead of us, but that may be already in the price. And the other, which is a little more PSU bank specific, is how much money do they need to raise to fix their balance sheets, and at what prices are going to come. And that, that's the only negative. But even keeping that in mind, I think valuations of some of the Indian banks, both some of the private sector banks and certainly the PSU banks, the high quality ones like SBI, look oversold to us.
Okay, I'll come to the stock-specific questions in a bit, Arvind. But before that, I wanted to, just make one comment on your view that the markets currently are oversold, but they could perhaps stabilize in the near term. My only fear is that what if the price-wise correction gets done now, but the time-wise correction is, a long and a painful process? Then how do you manage the equity markets or your investments in the year to come?
The price-wise correction is being driven by global factors. For the time-wise correction to last a long time, we would basically have to see India continue to struggle in terms of its growth. Again, India is another country where the GDP numbers are pretty useless measure of judging the health of the economy. The things that we are seeing are the earnings reports by the public companies, and the earnings reports for the last couple of quarters have been extremely disappointing. There's virtually no earnings growth. In fact, a couple of quarters back, we had negative earnings growth. And I think this quarter still is not showing enough turn momentum. So the price, recession, if you will only, or price correction in stocks will only come if we see an extended period of continued sluggishness and growth. Because at the end of the day, people are buying companies for their earnings. And if the earnings are not there, then that's not going to happen. But as I've said before, I certainly see some signs in some sectors of green shoots, and I think the banking sector is the big one. The question we've talked about, is this one where, does the RBI if there is global turmoil, does the RBI hold its hand in terms of cutting interest rates? I suspect at least for the next couple of months that's the case. And then do you see an economic recovery, and do you see some of the bad debt problems getting fixed? So that probably remains one of the bigger sectors that is going to determine whether or not we're going to get a real rally, or this will just remain, sluggish and cheap for a long time.
Okay, Arvind, do you expect a pre-budget rally? How are you looking? How are you approaching the budget? Will reneging on the fiscal deficit timetable worry markets? Just your early thoughts.
I'm really, frankly, I'm becoming less and less enchanted with budget watching. I mean, frankly, the last couple of budgets by this government and, previous budgets by the previous government haven't been any big bang things coming out of it. So, fiscal discipline is good. But, there's been disappointments. I mean, this government's disinvestment target is being way undershot. And the only reason that the budget is holding is because of oil collapse globally and the government's ability to increase excise taxes while lowering petrol and diesel prices, so they've been able to have their cake and eat it too. And that's helped. My biggest concern on the budget is what kind of oil price assumption and what kind of assumptions are they going to make, because clearly this government has a strategy on disinvestment, which is frankly no strategy as far as I can tell, because it's been very, very poorly handled. So I'd like to see a more realistic investment approach, whether it's in the budget or otherwise, in terms of what are the major areas where the government is going to focus on investments, and what are they going to do in terms of some of the deficit targets, which are not counting on just the manna from heaven, so to speak, in terms of low oil prices. Because what happens if oil prices do recover to some level? Will the government then be left with a budget deficit which they had not planned on?
Okay, Arvind, the other question that's interesting from Indian point of view is, where will this market get leadership from? That was the problem for large cap stocks all through last year. Where do you see leadership emerging if the market has to recover from here?
Well, that's a very good question. I mean, I think it has to come from the banks. If the banking sector, in a broad base, leadership is not going to come from some small sector. The road sector is not going to lead the market, or the CV sector is not going to lead the market. The auto sector, again, Maruti, can that lead the whole market? I don't think so. I mean, those are all, good potential winners in some of these sectors and companies exposed to that. But to get a broad leadership in the market, you're not going to get it without the financials. And I think, for the financials, what we need to get past is this whole bad debt recognition, the issue going on between RBI and the banks, and getting that out of the way on the table, and getting loan growth back. And frankly, not just counting on RBI to come to their rescue to keep cutting interest rates, but actually seeing the fundamentals of the banking sector, turn a corner. And I think that's going to be critical for a broad-based market rally.
So apart from the banks, okay, that's one sector that you gave us. Which are the other sectors where you're seeing some green shoots and one can perhaps increase or rather accumulate into now?
Well, as I've just mentioned, I think the CV cycle seems to be on a very solid path. I think the auto sector certainly is seeing recovery in demand, and these are areas where I think the demand recovery has legs that is going to go on for a while. I think road-related infrastructure is starting to see meaningful orders. I expect other infrastructure projects, whether it is the new capital for Andhra Pradesh, Simandra, that orders or water-related projects, or the Clean Ganga or ports. There are many things that are on the anvil. Again, I'm not sure that they're directly tied to the budget, but these are things that the government has been working on, where there could be some specific industrial construction-related companies whose balance sheets are not so leveraged that they are, basically zombies. There are unfortunately too many of those in that sector, but you could see some of those providing leadership. And then, the other sector that I'm watching, although I'm continue to be somewhat disappointed, is clarity on the power sector and related stuff with the scheme that the government has for state electricity boards. I don't know if I should call it a bailout, but some kind of a restructuring and bailout. And if that is implemented cleanly and clearly, there could be some benefit there. And then, some of the consumer sectors, more urban-oriented, although the consumer companies' numbers have been so far not anything to write home about, but that could be another area that you could see recovery. So there are many sectors that could provide, some of which are visible, some of which are, we hope. But to get a broad-based rally, some of the hope will also have to move into the visible. Otherwise, it's a very narrow focus in a few sectors that are seeing signs of life.
All right, Arvind, thank you very much for your views and for what we should say is cautious optimism that things have fallen enough and probably this mania has to end somewhere. Thank you very much for joining us.